Nobody talks about the part of trading that takes up most of your time. Not the entries, not the exits, not the analysis, not the risk management, the waiting. Somewhere between 90 and 95% of your trading career will be spent doing absolutely nothing. Watching, sitting, waiting for a moment that may or may not come today. And the brutal truth is that most traders are catastrophically bad at this part. Not the execution, the waiting. Think about that for a second. The thing that consumes the majority of your time as a trader is the thing nobody teaches you how to do. Every course covers entries and exits. Every mentor talks about setups and risk ratios. Every book breaks down strategy and psychology of execution. But nobody sits you down and says, here is how to wait. Here is how to sit in front of a chart for 3 hours and do absolutely nothing without losing your mind and forcing a trade that was never there. Because here's what actually happens. You open the chart. You have your plan. You know your setup. And then, nothing. Price meanders. No setup forms. The market breathes in and out without giving you anything real to work with. 5 minutes pass. 15. An hour. And that's when it starts. That quiet internal pressure. That creeping feeling that you should be doing something. That other traders are finding opportunities you're missing. That sitting here doing nothing means you're falling behind. And so you take a trade. Not because your setup appeared. Because the waiting became unbearable. That trade, the one born from impatience rather than opportunity, that is where most trading accounts quietly bleed out. Not in dramatic crashes. Not in single catastrophic decisions. In the slow accumulated cost of trades taken simply because the waiting felt like failure. By the end of this video you'll understand why waiting is a skill, how to build it, and why the traders who master it always outlast the ones who don't. Chapter 1. Why waiting feels impossible. Let's start with why this is so hard. Because it isn't just impatience. It's deeper than that. Your brain was not built for deliberate inaction in high-stimulus environments. Think about what you're asking your nervous system to do when you sit in front of a live market. You're surrounded by constant movement. Numbers changing. Candles forming. Price ticking up and down in real time. Your screen is essentially a slot machine running continuously, and your brain, wired for pattern recognition and reward seeking, is scanning every single tick for something to respond to. This is called a variable reward environment. The same psychological mechanism that makes social media addictive, that makes gambling compelling, that makes you check your phone 40 times a day. The market is the most sophisticated version of this environment ever created. And you're asking yourself to sit inside it and do nothing. Neuroscience research on decision fatigue shows that the longer a person is exposed to a high-stimulus environment without acting, the more their brain interprets inaction as a problem to be solved. The discomfort isn't weakness. It's biology. Your brain genuinely begins to experience the absence of action as a threat. This is why experienced traders develop rituals around waiting. Not because they're superstitious. Because they've learned that the waiting period requires as much deliberate management as the trading period itself. The amateur sits in front of the screen and fights the urge to trade. The professional structures their environment so the fight is easier to win. Chapter 2. What bad waiting looks like. Let's be specific. Because bad waiting has a very recognizable pattern and most traders have lived it so many times they've stopped noticing it. It starts with a plan. You know what you're looking for. The setup is clear in your mind. You open the chart with genuine discipline and patience. 20 minutes in, you start adjusting your criteria slightly. The setup isn't quite there, but it's close. You zoom into a lower time frame to see if it looks better there. It does a little. You tell yourself you're being adaptive, reading the market in real time. You enter. The trade goes against you immediately. You exit at a loss. Now you're frustrated. Now the waiting feels even more unbearable because you're not just bored anymore, you're down. And being down creates a new kind of urgency. You need to get it back. So you look harder. You find something. Another marginal setup. Another loss. By the time your actual setup appears, the one you open the chart for, you're either too depleted to take it properly, too small because you've already lost too much, or too emotionally compromised to execute with confidence. The irony is almost cruel. You waited for the right setup. Then you couldn't wait. And by the time it arrived, you were no longer in a position to take it the way it deserved. This is the real cost of bad waiting. It's not just the losing trades themselves. It's what those losing trades do to your state when the real opportunity finally appears. Chapter 3. The Surgeon and the Sniper. Two professions that understand waiting better than almost any other. A surgeon doesn't perform unnecessary procedures to stay sharp. They maintain their skill through preparation, study, and simulation. But when they're in the operating room, They move with complete precision because they've preserved their focus for the moment that actually demands it. A sniper doesn't fire at every shadow in the tree line. They can lie completely still for hours, days sometimes, because they understand that one precise shot is worth infinitely more than 100 imprecise ones, and that the quality of that shot depends entirely on the quality of the weight that precedes it. Both of these professionals have something in common. They have absolute clarity about what they're waiting for. The surgeon knows exactly what a complication looks like. The sniper knows exactly what the target looks like. Their waiting isn't passive. It's intensely focused attention directed at a specific thing. This is the difference between bad waiting and good waiting in trading. Bad waiting is unfocused. You're sitting at the chart with a vague sense of what you want, half watching the market, half distracted, half scrolling your phone, letting the time pass until something catches your attention. Good waiting is active. You know precisely what you're looking for. You're watching the market develop with focused attention. You're not bored because you're genuinely engaged in the process of observation. You're just not acting until the specific conditions you defined are met. The sniper isn't bored in the field. They're completely present. They just haven't pulled the trigger yet. That's what waiting looks like when you do it right. Chapter 4. The cost nobody calculates. Here's something most traders never sit down and actually measure. The real cost of impatient trading isn't just the losing trades. It's the opportunity cost of being compromised when the good trades arrive. Think about it this way. Imagine your strategy genuinely produces 5 high-quality setups per month. Those 5 setups, taken with proper size and full emotional clarity, would generate consistent returns over time. That's your edge working as designed. But in between those 5 setups, you take 15 additional trades out of impatience, boredom, and the inability to wait. Those 15 trades don't just lose money directly. They do something more damaging. They arrive before your real setups. They deplete your daily loss limit. They compromise your emotional state. They reduce your position sizing capacity. They cloud your judgment. So when your 5 genuine setups appear, you're taking them at reduced size, with damaged confidence from a compromised psychological state. Your edge is still there. But you've systematically reduced your ability to capitalize on it. The 15 impatient trades didn't just cost you what they lost. They cost you a portion of what your 5 real trades should have made. This is the hidden tax of bad waiting. And it's a tax most traders pay every single week without ever calculating the true amount. One trader described this realization. I thought my strategy wasn't working. I tracked my trades for 3 months and realized my strategy had a 68% win rate. But my overall account was down. The math only made sense when I separated my planned trades from my boredom trades. My planned trades were profitable. My boredom trades were destroying everything they built. Chapter 5. Building the skill of waiting. So how do you actually build this? Because saying just be patient is the least useful advice in trading. Patience isn't a personality trait you either have or don't. It's a skill with specific mechanics. The first mechanic is clarity of criteria. You cannot wait well for something you haven't defined precisely. Vague criteria produce vague waiting. If your setup is, price looks like it's going to bounce here, you will find that setup everywhere because it can mean almost anything. Specific criteria produce specific waiting. Price returns to the 50 EMA on the 4-hour chart, forms a rejection candle, and closes above the previous low. That either happened or it didn't. There's no interpretation required. Which means there's no room for your impatience to creep in and redefine what you're looking for. The more precisely you can define your setup, the easier waiting becomes. Because you're not making a judgment call every 5 minutes. You're running a binary check. Is it there or isn't it? The second mechanic is separating preparation from execution. Most traders do their analysis and their trading in the same session at the same screen in the same mental state. This is a mistake. Your analysis brain and your execution brain are different operating systems. Analysis requires exploration, hypothesis, flexibility. Execution requires precision, discipline, rigidity. When you mix them together, your analysis brain stays active during your trading session and keeps finding new things to respond to. New patterns. New opportunities. New reasons to deviate from the plan you already made. The fix is to do your analysis completely before the trading session begins. Know exactly what you're looking for before you open the chart. Then during the session, your only job is to check whether your predetermined criteria are met. Not to think. Not to analyze. Just to observe and wait. The third mechanic is redefining productivity. Every time you successfully don't take a bad trade, that is a productive outcome. Treat it that way. Most traders journal their trades. Almost no traders journal their non-trades. Start tracking the moments you identified a marginal setup and chose not to take it. Note what it looked like and why you passed. Over time this builds two things: a record of your discipline that you can look back on, and a reward mechanism for the act of waiting itself. Your brain responds to recognition. If you only ever acknowledge what you did, you'll always be biased toward action. Start acknowledging what you didn't do and watch how your relationship with waiting begins to shift. Chapter 6. What good waiting produces. Here's what happens on the other side of mastering this. When you genuinely stop taking trades out of impatience, something changes in how you experience your real setups. They feel different, cleaner. You approach them with a clarity and confidence that's almost impossible to manufacture when you've spent the previous 2 hours forcing marginal entries. Your position sizing becomes more consistent because your account isn't already chipped away by boredom trades. Your emotional state during the trade is calmer because you haven't already been through 3 losses trying to manufacture opportunity. Your exits become cleaner because you're not making decisions from a compromised, frustrated state. The trade itself performs better not because the setup changed but because you changed. The version of you that takes a trade after 2 hours of disciplined waiting is a fundamentally different decision maker than the version of you that takes a trade in hour 3 of impatient screen watching. One trader described it this way: I used to think my edge was my strategy. Now I realize my edge is my ability to wait for my strategy. The setup was always there. I just kept arriving at it in the wrong state. The market doesn't change. The setups don't change. What changes is the quality of the trader who shows up to take them. And that quality is built entirely in the waiting room. Trading will ask more of you in the moments of inaction than in the moments of action. It will ask you to sit still while everything in your wiring screams move. It will ask you to do nothing while your ego whispers that doing nothing means falling behind. It will ask you to watch opportunity after marginal opportunity pass without reaching for it, trusting that your setup is coming and that preserving yourself for that moment is worth more than anything you could manufacture in the meantime. This is the work nobody talks about. The invisible discipline of the waiting room. Not the entry. Not the exit. The hours in between where your account is either being protected or quietly bled out by the version of you that couldn't wait. So here's what I want you to track this week. Every time you identify a setup that doesn't fully meet your criteria and you choose not to take it, write it down. Just a single line. Passed on X, criteria not met. At the end of the week, look at that list. That list is your real trading journal. And the longer it is, the better trader you're becoming. Drop in the comments how many trades you think you take out of impatience versus genuine setup. Be honest. Nobody's watching except you. And if this hit close to home, share it with a trader who's been grinding harder and getting worse results. Because sometimes the message someone needs most is the simplest one. Stop. Wait. Let it come to you. I'll see you in the next one.